You are listening to chartingwealth.com for Tuesday, the 25th of April, 2017. We see the stocks up for the day, very strong on both the S&P 500 and the Nasdaq 100. Gold and the 20-year bond down. Let's jump right into the market on our weekly chart. We see our weekly chart sliding sideways on the price percent oscillator because of the big up day on the first day of the two-day candle. We also see the derivative oscillator running parallel. After a down week with a spinning top over the last week ending this past Friday, the 21st of April. Remember, we had our crossover going down on the weekly chart back on the 31st, Friday the 31st of March. We had the market head down and started the week with a bang up. So we shall pay attention. Let's look, as we always like to do it, what's going on that two-day chart. It is not crossed over going up. If it does cross over going up, consider jumping out of that down trade at that point. Very much consider jumping out. You can sure go back in when the market rolls back over, paralleling the down move in the big chart, if indeed that occurs. But I would not stay in through a crossover, but that has not happened yet, my friends. And remember, over and over, we've watched this happen. That weekly vertical crossover is awfully powerful. Does not mean that it's going to have to keep going down, but when we look at our charts, we see it happen over and over and over again. We can see some false crosses where the market will rebound off as it did back in June of last year. But again, when it crosses over, and sometimes it takes it a while to cross over, as it did back in mid-January, mid-December 2015, but when it did cross over, it shot down for several weeks, going down in early January 2016. So again, this weekly chart is typically a very, very good chart, and it is still going down. So we shall continue to watch, and we will rely on what we've been able to rely on in the past. But we don't make the charts work for us. We follow the charts, remember. So if the charts tell us to get out, we will get out, my friends. We trend follow. That is the only way the smart money moves in the market. Now, let's go to the Qs. Up 1.20%. Again, strong up move. We can see on the weekly chart, Qs still has a derivative oscillator trending down, more down energy. It is close, has not crossed over going up yet, but is not strong going down. And again, if we have a crossover, we shall sure jump out of the weekly chart and look for an up move. Again, getting close on the two-day chart, has not happened yet. We'll see how the two-day candle ends on Tuesday. Don't yet know what it's going to do. It's fooled us plenty of times before. If indeed that two-day chart crosses over, we shall use that as an opportunity to jump out of any down trade. If you're not already out, I am continuing to watch and see if indeed there is a crossover on the two-day chart. If that happens, I will close my trade and wait for there to be another crossover going down on that two-day chart, if indeed that occurs. Many of you have been asking us, how do we make those decisions? We look at the bigger charts once we jump in on our entry points on the Monday following that to that weekly vertical crossover. Let's keep moving through these charts. We're going to go back to our weekly chart. Going to take a look at TLT. It was down 0.48% for the day on Monday, still above the weekly trend line. And we see the weekly trend line still going up, derivative oscillator still going up. Let's take a look at the two-day chart, see what we see. Of course, it's losing energy, running parallel. It has broken the two-day trend line, still above the weekly. We will keep an eye on things, because remember, we had that weekly vertical crossover way back on Thursday, the 2nd of, well, it's probably the 3rd of, and in fact, I'm not on the weekly chart. So if I go to the weekly chart, I can tell you exactly when that occurred. And that, of course, was on Friday, the 3rd of February. And what do we look for? Well, we saw the 2-day chart rotate back over. There was an entry point after that. We shall, of course, pay very close attention, but we continue to see strong up movement on the weekly chart, but we will take a cue from that 2-day chart if it crosses over going down. But again, one day does not make a change in our trading decisions unless it is a 9/11, a really bad Black Friday, one of those kinds of days where there's systemic crashes in the market. Of course, we are not seeing that. But our goal is to trend follow and to do what works. So we'll keep an eye on TLT. And let's go back to our weekly chart. We're going to take a quick look also at gold. Gold down 0.69% for the day. Gold still moving up on the PPO, the price percent oscillator, and derivative oscillator still moving up. But we see lots of indecision pretty much with a doji still above the weekly trend line, below the 2-day trend line. And of course, if we take a look at that 2-day chart, what do we see? It is headed down. We shall pay close attention to that. Of course, what's the most prescient chart that we look at? That is our 4-hour chart, which is still in a confirmed down move. That crossed over going down back at the end of the day on Wednesday the 19th. And those of you who know what we think about our 4-hour chart, it is prescient. It tells us over and over again how things are going to go and is rarely wrong once it starts working. Seems to stop working at the end of the year, start working at the beginning of the year. It did that last 2 years running. And in fact, if you go back to 2015, I think you'll find it doing the same thing then in 14. But just pay attention. That 4-hour chart's so important. What makes it easier? Well, if that 4-hour chart's crossing up, going up at the same time, or going in the same direction as the weekly and the 2-day chart, then of course you've got the potential for real wins like we saw on the 11th at noon when that crossover happened and that nice strong climb till it didn't climb anymore. So we'll continue to keep a close eye on gold. Again, friends, if you've got questions, problems, concerns, we'd love to hear from you. You can write us, email us, cw@chartingwealth.com. Please go to the website, sign up for our daily email, which includes this video of what's going on in the markets when it comes to the S&P 500, the Nasdaq 100, gold, and bonds. We're so happy to bring this to you. We love to hear from you. And also follow us on Facebook, YouTube, Instagram. You name it, we are there. Please be sure to subscribe to our YouTube channel and also to our iTunes channel. You can subscribe to both the weekly iTunes podcast or the daily. And of course, everything is available if you simply subscribe at chartingwealth.com. Thank you so much. God bless from chartingwealth.com.